Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today, we're looking at nCino Incorporated. And let's just say they're looking to do something a little different with their own stock. Get ready, because we're about to dive into a stock repurchase plan that could shake up the market. And if you love getting these corporate insights explained simply, make sure you are subscribed and join our Discord community. The link is in the description below. So, what is the big news from nCino Incorporated on December 8th, 2025? Well, their board of directors, which is like the main decision-making group for the company, decided to authorize a plan to buy back their own company stock. Think of it like the company saying, hey, we think our stock is a good investment, even for ourselves, so we're going to buy some of it back from the market. This stock repurchase program is set to acquire up to $100 million worth of the company's shares that are currently owned by investors. Now, this doesn't mean they have to spend all $100 million or even buy any shares immediately. The company can make these repurchases from time to time, meaning whenever they feel it is the right move. How will they do it? They have a few options. They can do what are called open market purchases, which is basically buying shares on the stock exchange, just like any investor would, following all the official rules, of course. They can also do block trades, which are big chunks of shares traded at once, or privately negotiated transactions, which means they agree on a price directly with a seller. They might even use something called accelerated stock repurchase transactions, which are a bit more complex and often involve an investment bank. And get this, they can also use what are called Rule 10b 5-to-1 plans. These are special trading plans that companies can set up to buy back stock even if they have important non-public information. It is designed to prevent insider trading accusations by creating a pre-arranged plan. The volume, price, timing, and how they buy back these shares will all be decided by nCino's management. This decision will depend on things like market conditions, how much money they have available, and other business opportunities they might see. What is really important to understand here is that this program does not force nCino to buy any specific amount of stock. It also has no set end date, and they can change it, pause it, or stop it completely whenever they want. It is entirely at the board's discretion. The main goal of these buybacks is usually to return value to shareholders by reducing the number of outstanding shares, which can potentially increase the earnings per share and the stock price. Sometimes it is also a signal that management believes the stock is undervalued. Now, the details of this announcement came out in a press release, which is part of this filing. This press release is labeled as Exhibit 99.1 and is essentially incorporated into this report, meaning what is in the press release is officially part of nCino's filing with the government. And of course, like most modern filings, there is an interactive data file which makes it easier for computers to read and analyze this information. This is labeled as Exhibit 104. So what does this all mean from a broader perspective? A $100 million stock repurchase authorization is a significant move for a company like nCino. It shows confidence from the board in the company's future prospects and its stock value. It can be a good sign for investors who believe in the company's long-term strategy. However, it also means that cash that could be used for other investments like research and development or acquisitions might be allocated towards buying back shares. Looking at the markets and nCino's position, they operate in the financial technology space, providing cloud-based software solutions primarily for banks. The banking industry has been undergoing significant digital transformation, and companies like nCino are positioned to benefit from this trend. A stock buyback can signal maturity and a focus on shareholder returns, especially if the company has generated strong cash flow and sees limited opportunities for higher return investments elsewhere. We need to consider if this buyback is a sign of genuine undervaluation or simply a way to prop up the stock price. Without seeing their latest financial performance tables alongside this announcement, it is hard to say definitively. However, knowing nCino is actively managing its capital structure through such a significant buyback program suggests a strategic approach to shareholder value. In conclusion, nCino Incorporated is making a bold statement with its $100 million stock repurchase authorization. It signals confidence and a focus on returning value to its shareholders. While the specific impact will depend on how and when these repurchases are executed, it is a noteworthy development for investors keeping an eye on the financial technology sector. What are your thoughts on nCino's stock buyback plan? Do you think it is a smart move or a sign of something else? Let me know your insights in the comments below if you found this breakdown helpful. Please give this video a thumbs up and subscribe for more in-depth corporate analyses. And don't forget to join our Discord community for even more discussions and insights. Thanks for watching, and we'll see you in the next episode.